Welcome everyone, just a quick note before we start. We are not financial advisors and this video is for informational purposes only. Always do your own research. Today we're going to tackle an exciting topic, the comparison between stocks and cryptocurrency. These two asset classes have been making waves in the financial world. Understanding their differences and similarities can help us make informed investment decisions. So, without further ado, let's dive into the world of stocks and cryptocurrency. First, let's talk about stocks. Stocks, also known as shares, represent ownership in a company. When you buy a stock, you're purchasing a small piece of that company, becoming a shareholder. This gives you a claim on part of the company's assets and earnings. Now, how do stocks work? Companies issue stocks to raise money for various reasons, such as expanding their business or paying off debt. These stocks are then traded on exchanges like the New York Stock Exchange or the Nasdaq. The price of each share fluctuates throughout the day, influenced by supply and demand. Historically, stocks have proven to be a profitable investment. Over the long term, they've provided an annual return of around 7 to 8% after inflation. This performance, coupled with the power of compounding, can lead to substantial growth of investment over time. Why do people invest in stocks? There are several reasons. Some are attracted to the potential for high returns. Others appreciate the opportunity to own a piece of a company they admire or believe in. And many investors enjoy the thrill of the market itself, the game of predicting which businesses will succeed and which will fail. It's important to remember though that while stocks can offer significant rewards, they also come with risks. The value of stocks can go up and down, sometimes quite dramatically. This volatility is part of what makes investing in stocks both exciting and nerve-wracking. Now that we have a good understanding of stocks, let's move on to cryptocurrency. Next up, we have cryptocurrency. This digital or virtual form of currency uses cryptography for security, making it incredibly difficult to counterfeit. Unlike traditional currencies issued by governments, cryptocurrencies are decentralized and operate on technology known as blockchain, a distributed ledger enforced by a network of computers, often referred to as nodes. Cryptocurrencies, with Bitcoin being the pioneer, have been on the scene since 2009. Since then, over 6,000 different types have emerged, each with their own unique features and utilities. The value of cryptocurrencies has seen extraordinary highs and dramatic lows, a volatility that can be both a risk and a reward for investors. Historically, cryptocurrency has performed exceptionally well. For instance, if you'd invested a mere $100 in Bitcoin in 2009, today that investment would be worth millions. This phenomenal performance is one of the reasons people invest in it, but it's not the only one. Investors also appreciate the transparency and security that the blockchain technology offers. Plus, the idea of being part of a financial revolution is appealing to many. Cryptocurrencies have the potential to redefine our understanding of money, offering a digital alternative that could reshape global economies. But like any investment, it's crucial to understand what you're getting into. Cryptocurrencies can be complex and their future is anything but certain. Now that we've covered the basics of both stocks and cryptocurrency, let's compare them. Now let's look at the pros and cons of each. Let's start with stocks. One of the most significant advantages of investing in stocks is their reliability. Stocks have been around for centuries and have a long history of returns. They're regulated by financial authorities worldwide, which adds a level of security for investors. Moreover, stocks offer dividends. When a company you've invested in makes a profit, you get a slice of that pie. It's a nice little bonus that can add up over time. However, stocks do have their downsides. They can be impacted by external factors such as economic recessions or changes in government policy. Additionally, investing in stocks requires a decent amount of research and knowledge to understand market trends and company performance. Switching gears, let's consider cryptocurrency. One of the biggest perks of cryptocurrency is its potential for high returns. Given its volatility, it's not uncommon for the value of a cryptocurrency to skyrocket in a short period. If you're willing to take on the risk, the rewards can be substantial. Cryptocurrencies are also easily accessible. Unlike stocks, which are tied to a particular country's economy and require a brokerage account to trade, cryptocurrencies can be bought and sold by anyone, anywhere, anytime. You just need an internet connection and a digital wallet. But, as with anything, cryptocurrencies come with their share of drawbacks. Their volatile nature means that as quickly as values can rise, they can also plunge. If you're risk-averse, this might not be the investment for you. Another concern is the lack of regulation. While this means more freedom for traders, it also opens the door to potential scams and fraud. Plus, because cryptocurrencies are still relatively new, their long-term viability remains uncertain. So when comparing stocks and cryptocurrencies, it's like comparing apples and oranges. They're both forms of investment, but they cater to different types of investors. If you're someone who prefers a steady, long-term investment with moderate returns, stocks might be your go-to. They offer stability, dividends, and are regulated by financial authorities. On the other hand, if you're a risk-taker looking for potentially high returns, and don't mind the roller coaster ride, cryptocurrencies could be your choice. They're easily accessible, offer high potential returns, but come with their fair share of risks. Of course, this isn't an exhaustive comparison. There are other factors to consider like transaction costs, liquidity, and more. But this gives you a basic idea of what to expect. As we can see, both stocks and cryptocurrency have their own unique advantages and disadvantages. And remember, whether you decide to invest in stocks or cryptocurrencies, make sure you do your own research and understand the risks involved. Don't invest more than you can afford to lose. After all, investing should be a means to secure your financial future. Now that you've compared stocks and cryptocurrency, here are some practical tips for investing in them. First and foremost, diversification is key. It's a fundamental principle of investing, and it applies to all forms of investment, whether they're stocks, cryptocurrencies, or any other asset class. By spreading your investments across a variety of assets, you can potentially reduce risk while maximizing potential returns. It's like the old adage, don't put all your eggs in one basket. Secondly, do your research. Whether you're investing in a blue-chip stock or an emerging cryptocurrency, understanding the fundamentals is crucial. For stocks, this might mean analyzing a company's financial statements, understanding its business model, and keeping an eye on industry trends. For cryptocurrencies, it could mean understanding the technology behind it, its use case, and the team behind the project. Research helps you make informed decisions and avoid making impulsive, emotionally driven investments. Next, understand your own risk tolerance. Everyone's financial situation and investment goals are different. Some may be willing to take on more risk for the potential of higher returns, while others may prefer a more cautious approach. It's important to assess your own risk tolerance and invest accordingly. High-risk investments like certain cryptocurrencies might be suitable for some, but not for others. Moreover, consider the long-term perspective. While it can be tempting to chase short-term gains, investing is generally a long-term game. Stocks and cryptocurrencies can be volatile in the short term, but over longer periods, they've shown potential for significant returns. Lastly, remember to keep emotions in check. The world of investing can be a roller coaster of highs and lows. It's crucial to stay calm during market volatility and stick to your investment plan. Remember, investing always involves risk, and you should only invest what you can afford to lose. It's not about getting rich quick, but about building wealth over time. And always do your own research or seek advice from a financial advisor. To wrap it all up, we've taken a deep dive into the financial world today, breaking down the ins and outs of two significant asset classes, stocks and cryptocurrency. We've understood that stocks, the traditional investment avenue, represent ownership in a company. They offer numerous advantages such as dividends and potential long-term growth. However, they are not without their risks, including market volatility and the possibility of company failure. On the other hand, cryptocurrency, the digital currency secured by cryptography, has emerged as a new age investment asset. It promises high returns and anonymity, yet it's also subject to extreme volatility, regulatory uncertainty, and security issues. It's essential to remember that both asset classes come with their own set of pros and cons, and deciding between them isn't a one-size-fits-all answer. It depends on your risk tolerance, investment goals, and market knowledge. However, one golden rule of investing remains constant. Do your own research. Don't just take our word for it. Dive into the details, study market trends, and make informed decisions. After all, we are not financial advisors, just enthusiasts sharing our perspective. In conclusion, whether you choose stocks, cryptocurrency, or a mix of both, remember to invest wisely and responsibly. Thanks for watching, everyone. Be sure to like, comment, and subscribe. And don't forget to hit the bell notification so you'll get updates anytime we upload a new video.